Welcome, fellow financial adventurers, to the whimsical world of the stock market. Buckle up, because we're about to embark on a roller coaster ride through the basics of investing. Whether you're a seasoned trader or a complete newbie, this article is your ticket to understanding the stock market, sprinkled with a generous dose of humor. So, grab your popcorn, sit back, and let's dive into the thrilling universe of stocks. First of all, we need to understand the stock market. What is the stock market? Imagine a bustling marketplace where people shout, wave their hands, and trade everything from exotic fruits to antique teapots. Now, replace those fruits and teapots with shares of companies, and you've got the stock market. The stock market is where investors buy and sell ownership in companies, known as stocks or shares. It's like eBay, but for pieces of businesses. Why should you care about the stock market? Well, you could stuff your money under your mattress, but that won't get you very far. Investing in the stock market offers the potential for growth, helping you build wealth over time. Plus, it's way more exciting than watching your savings account interest trickle in at the speed of a sleepy sloth. Who's who in the stock market? 1. The investors. These are the folks like you and me, looking to grow our hard-earned money. Investors can be individuals, institutions, or even that eccentric uncle who swears by his magic stock-picking strategy. 2. The brokers. Think of brokers as the stock market's matchmakers. They connect buyers and sellers and facilitate trades. Just like in a rom-com, they'll help you find your perfect match in stocks, of course. 3. The exchanges. Stock exchanges are the glamorous stages where all the trading action happens. The New York Stock Exchange, NYSE, and the NASDAQ are two of the most famous. Picture them as Wall Street's version of Broadway, but with fewer musicals and more numbers. 4. The regulators. These are the market's bouncers, ensuring everything runs smoothly and fairly. The Securities and Exchange Commission, SEC, is the big boss here, keeping an eye out for any shady business. Think of them as the referees in a high-stakes financial game. How stocks work, the nitty-gritty. What is a stock, anyway? A stock represents a small piece of ownership in a company. When you buy a share, you're essentially buying a tiny slice of that company's pie. And who doesn't love pie? Dividends, the cherry on top. Some companies share their profits with shareholders in the form of dividends. It's like getting a bonus slice of pie just for being a part owner. Cha-ching. Stock prices. Why do they fluctuate? Stock prices are like teenagers, unpredictable and moody. They can change based on various factors like company performance, economic conditions, and even the latest tweet from a billionaire. Understanding these fluctuations is key to becoming a savvy investor. Types of stocks. The menu of choices. Common stocks versus preferred stocks. Common stocks. These are the most popular type of stocks, giving you voting rights at shareholder meetings and a share in the company's profits. It's like being invited to the coolest party in town. Preferred stocks. These stocks are a bit fancy, offering fixed dividends and priority over common stocks in case of bankruptcy. Think of them as the VIP section of the stock market. Growth stocks versus value stocks. Growth stocks. These are shares in companies expected to grow at an above-average rate. They might not pay dividends, but their value can skyrocket over time. It's like betting on a rising star in Hollywood. Value stocks. These are shares in companies that are undervalued by the market. They're the hidden gems, often overlooked but with great potential. It's like finding a designer dress at a thrift store. The stock market alphabet soup. These are key terms to know. IPO, initial public offering. This is when a company goes public and offers its shares to the general public for the first time. It's like a debutante ball for businesses. Bull market. When stock prices are rising, it's called a bull market. Picture a bull charging forward with unstoppable momentum. Yeehaw! Bear market. When stock prices are falling, it's a bear market. Imagine a bear hibernating, slowing down, and taking a nap. Yawn. Blue chip stocks. These are shares in large, well-established companies with a history of reliability and stability. Think of them as the royalty of the stock market. P/E ratio, price to earnings ratio. This ratio helps you gauge if a stock is overvalued or undervalued. It's like checking the price tag before buying those designer shoes. Market capitalization, market cap. This is the total value of a company's outstanding shares. It tells you if a company is a heavyweight champion or a scrappy underdog. The art of stock picking. Finding your perfect match. 1. Do your homework. Before investing, research the company. Look at its financial health, management team, industry position, and growth potential. It's like stalking someone on social media before going on a date. You want to know what you're getting into. 2. Diversify, diversify, diversify. Don't put all your eggs in one basket. Spread your investments across different sectors and industries to reduce risk. It's like having a balanced diet. You need more than just pizza, even though pizza is awesome. 3. Understand your risk tolerance. Know how much risk you're willing to take. Are you a thrill seeker or more of a cautious turtle? Your risk tolerance will guide your investment choices. 4. Keep an eye on the news. Stay informed about market trends, economic news, and company updates. It's like staying current with the latest gossip, except this gossip can make or break your investments. The tools of the trade. Essential resources for investors. 1. Stock market apps. Apps like Robinhood, eTrade, and TD Ameritrade make trading easy and accessible. They're like having a financial advisor in your pocket. 2. Financial news websites. Sites like Bloomberg, CNBC, and MarketWatch provide up-to-date news and analysis. Think of them as your stock market BFFs, always keeping you in the loop. 3. Investment books and courses. Educate yourself with books like The Intelligent Investor by Benjamin Graham, or online courses on platforms like Coursera and Udemy. Knowledge is power, my friends. The stock market roller coaster. Handling the ups and downs. 1. Stay calm and invest on. The stock market can be volatile, but don't panic. Keep a long-term perspective and remember that fluctuations are normal. It's like riding a roller coaster. Hold on tight and enjoy the ride. 2. Have a plan. Set clear investment goals and stick to your strategy. Whether you're saving for retirement or a dream vacation, having a plan will keep you focused. 3. Avoid emotional investing. Don't let emotions drive your decisions. Fear and greed can lead to costly mistakes. Stay rational and think long-term. The power of compounding, your secret weapon. What is compounding? Compounding is the process where your investment gains generate more gains. It's like planting a money tree that grows bigger and bigger over time. Albert Einstein called it the eighth wonder of the world, and who are we to argue with a genius? The magic of time. The earlier you start investing, the more time your money has to grow. It's like starting a garden. The sooner you plant, the more bountiful the harvest. Common mistakes to avoid. Pitfalls on the path to prosperity. 1. Chasing hot stocks. Don't jump on the bandwagon just because a stock is trending. Do your research and make informed decisions. Remember, not all that glitters is gold. 2. Ignoring fees. Be aware of trading fees and account charges. They can eat into your profits faster than you can say brokerage commission. 3. Neglecting diversification. We've said it before, and we'll say it again. Diversify your portfolio. Putting all your money in one stock is like putting all your chips on a single roulette number. It's a risky move. 4. Overtrading. Frequent trading can lead to higher fees and tax implications. Sometimes, it's better to sit back and let your investments do the work. Patience is a virtue in the stock market. Advanced concepts for the brave and bold. 1. Options trading. Options give you the right, but not the obligation, to buy or sell a stock at a specific price. It's like having a VIP pass to a concert. You can use it or not, depending on the circumstances. 2. Short selling. Short selling is betting that a stock's price will go down. It's like betting against the house in a casino, risky but potentially rewarding. 3. Margin trading. Margin trading involves borrowing money to invest. It's like using a credit card for your investments. Great if things go well, disastrous if they don't. Resources for ongoing learning. Never stop growing. 1. Financial podcasts. Tune into podcasts like The Motley Fool or Invest Like the Best for insights and tips. They're like having a financial guru in your ear. 2. Online communities. Join forums and groups on platforms like Reddit, Our Investing, and Facebook to connect with fellow investors. Sharing experiences and advice can be invaluable. 3. Financial advisors. If you're unsure where to start, consider consulting a financial advisor. They can help tailor a strategy to your needs and goals. Congratulations! You've made it through this epic journey into the stock market basics. Investing doesn't have to be intimidating. With a bit of knowledge and a lot of humor, you can navigate the stock market with confidence. Remember, the stock market is a marathon, not a sprint. Stay informed, stay patient, and most importantly, stay curious. Your financial future is in your hands, and with the right approach, it can be brighter than ever. So go forth and conquer the stock market, my fellow adventurers. And don't forget to have fun along the way. After all, investing is not just about making money, it's about building a future and living your dreams. Happy investing!